The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. This is the Monday edition, Monday, October the, I should know this. I wrote it down about 1,000 times, October the 6th. October the 6th, and we've already had 3 great hours. I hope mine can improve and on the situation in the marketplace, just to give you an overall of what's happening right at this moment. And let's see what happens over this particular hour, because what we've seen at this particular point is that the market had followed through residual strength. What is follow through residual strength? It is the huge move over 200 points on Friday didn't actually take out the high bar of Thursday, but now we've done that, and you needed to see if there was some carryover of that energy into this morning. Well, there was in the futures all the way through the night into the morning, and then there was a nice spike to the upside, but I don't think we've changed the trend. Now, this is going to be really interesting, because right now you've got a lot of people that are saying, we're just back to normal, buy the dips, we're going higher, we're going to all-time highs. And then there are those that are saying, oh, no, it's all over, we're going down thousands and thousands of points. I happen to be in between. I'm going one step at a time, as I always do, because if you can't get through the first resistance or support level, how can you even be talking about 3 dimensions later? How can you be talking about something that would be of a magnitude that is much greater than just merely breaking the first level of support or resistance? If we can't even do that, why even bother talking about the Dow going down to the 9,000 level or whatever it is? Just one step at a time. And we've got a number of beautiful tools that we can use. Look at this. We're looking at the E-minis, as I always do, and I show my subscribers every day to my opening call. Let me just mention that we covered a lot of the shorts. Nice profit. One had a profit over 34%. We've gone back into some short positions this morning, but not all the short positions. I wanted to give it a day. Yeah, I felt if there was a spike to the upside, unless there was a reversal of about a push to the upside and say Dow up 85 to 110, reversing and then closing down 80 points to 110, that would be significant. I wasn't sure there was that kind of reversal strength today, but I did see the possibility of some kind of a rug pull. I even have an indication that there should be some kind of a rug pull tomorrow morning based on one of my Chapman Wave proprietary techniques. Now, here's something that I think is very important. If you're looking at the E-minis right now, this is the S&P, this is the mini contract of the S&P December future. I gave an alternative count to the 120-minute chart, but the strength of the MACD and the strength of the stochastic said there's a real good chance we would get that requisite D in the Chapman Wave from a low bar at 1918.25 on the 6th of can't be the 6th, today's the 6th, on the 3rd of October. Was that the 3rd? The opening early in the morning? On the 2nd of October, that reversal on Thursday. And now what we're looking at is you've got the 200-period exponential moving average right there, 1970. I said that would be resistance. And then I also showed that the 1971s to 73s is really upside strong resistance. But it's the downside that if there was a piercing of the 1961 area, we could go down to the 1957. So far, 1959 is the low. And we've gone to a peak D, a leg D, and almost certainly it's going to be a peak D. I can't see us going from 1963 right now to 1971.25 to break into that high bar that we saw in the last 120-minute bar, 2-hour bar. Okay, now let's just get this out of the way. The daily chart is really what we've got to look at. And the daily chart, I drew in a cup formation, and it's vying, it's versus the arch formation. And my suspicion was, and I drew this in, that area there, right around 1971-ish, maybe it depends when it is, but 71-ish, maybe 73s, but really it's down in 71-ish, is going to be critical, because if the MACD, the moving average convergence divergence technical tool, flattens out and doesn't give a nice bounce to the upside, that's the green line, the 9-period differential, and yet the stochastic tries to move up, that 9-period moving differential in the MACD is going to be, it's going to be a resistance line. So I'm watching this very closely. Now here's something even more important. Within the context of this formation here, you can see all those bars on the left side that says 1978, the high of the 30th of September, 1977, the high of the 29th, 1979, the high of the 26th. On the left side, all those highs are going to be very strong resistance. So even if there's a break to the upside, taking out that level is going to be critical. If you start trading in the 1983 area in the next 2 days, I'd have to say, you know what? I think I'm going to be wrong. That, in fact, there's enough residual strength to maybe test the all-time highs. I just don't think it's going to happen in this move. Look at the weekly chart. This weekly chart is saying quite clearly that the candle with that long wick of Thursday, Friday of last week, making that weekly candle with a low of 1918.25 and a close at 1960, that entire candle is going to be something to watch all the way through the week, because if we start trading down and we get into the 1953 area on the E-mini, that's going to say, hey, watch that uptrend line. I can even now put it in as an as an upside, a rising trend line, up track, support, and resistance line if it breaks under it. So this is going to be very important. Getting into anywhere into the 1946 area is going to be so critical, because that's where it's make or break. If we break down from there, it's all over. Weekly chart's going to go even lower. And if it bounces strongly or doesn't even get there this week, instead starts to trade above the 9-period moving average in the weekly chart of 1969, I would have to say that that's very good action. Okay, enough for that. Now let's do the numbers. The Dow is up 33, having been up much higher earlier on, and down, and now back up again at 17,046. The S&P is up 2.5 at 1970, not showing the same kind of strength. It's only up 0.13%. The Dow is up 22%. I've got some charts to show you. I've also got something to talk about. I better do it right this second, because if I don't, and I think it's very important because it adds to the list of things that I'm looking at. Minus rainbows, a legendary room reopens from the Boston Globe this morning. This is the 6th of October, and it's by Larry Neumeister, Associated Press, New York. The Rainbow Room reopens Sunday in its historic perch atop 30 Rockefeller Plaza after a 5-year absence from the New York City skyline. Now, some of you might remember a webinar I did quite some time ago where I discussed Goldman Sachs. I discussed the IPO of Goldman Sachs becoming either a public company or expanding the number of shares in 1929. I discussed the Empire State Building. The papers were signed in August of 1929, propitious, right? And what happened? It opened within 18 months after the signing of the papers to become called the Empty State Building, and it took until 1952 or 1954 before they made a penny. So don't listen to people who say that in any time period, if you bought stocks, you'd be up huge. There are periods where if you bought them, you'd be down huge as well. So, so going on with us. Oh, and Rockefeller Center. In July, I think it was July or August of 1929, papers were signed, opened when the Rainbow Room opened in 1934. This is the 80th anniversary. They've done everything they can to bring it back. It's breathtaking. said Jamie Greenwald, one of more than 200 brunch guests who took in the sweeping views and significant improvements at the 80-year-old establishment. Its floors have been walked by Cole Porter. You remember Cole Porter? I told you all about Cole Porter. I used to play with a pianist who, his uncle and Cole Porter were buddies, and they used to take Roland to the opera. And I played with, he was a pianist, and I was a clarinetist, and I played with Roland all those years. I only found out about this after he had died, unfortunately. I would have really loved to have heard all about Cole Porter. Anyway, Michael Jackson, Elizabeth Taylor, Al Pacino, Barbara Streisand, and Muhammad Ali, among others. Herb roasted Amish chicken, oysters, shrimp, honey-baked Benton ham, Yorkshire pudding, and chicken, and black truffle pot pies were among the delicacies. The spread was created by executive chef Jonathan Wright. It's like opening night, Keith Douglas, a managing director of the real estate company Tishman Speyer, Rockefeller Center's owner and manager. Gosh, there's dozens of workers rushed about. You know, this is unbelievable. We are replicating. This is the golden age. I don't know what anybody's looking at. This is the golden age. Not gold. Gold is not doing very well, but it is the golden age, although gold is getting ready for a little bit of a bounce. And let's go through our numbers now. So, the reopening, the reestablishing, the refurbishing, the upgrading of that famous Rainbow Room, whatever it was called, in Rockefeller Center. So, yeah, this is the galloping gourmet. So the Dow is up 20 at 17,029. The S&P is up 80.86 at 1968. You've got the comp index. Ooh, the comp index. Let me just get this right here. The comp index, is that down? Excuse me, is that down? Wow, gap up, and now it's down 11 at 44.64. And we've got gold up 9 at 1202.50, which means the dollar, let me just show you something right here. Remember we spent some time over the last 2 weeks, and I said, wait a minute, what's going on with gold? Look at that left side low bar of the week of January the 3rd at 1185, round number low. And what have we just gone to today? The low was 1183.30. So we've made a full retracement, an arch formation. Remember my CD introducing the Chapman Wave methodology? Arch formations are really important when you come back to the left side. Cup formations are really important when you come back to the top on the left side. So what's happened is this is the opportunity for this week for the bar to go underneath, but to close above 1185. This is the opportunity, if there is one, for a bounce towards the 1235 area, the 9-period exponential moving average in the weekly. But it has to break 1211 first. That's the first resistance point. I'll finish up looking at these particular indexes as soon as we've got this break over. Very important break here at TFNN. And don't forget, folks, between, I believe, 4 and 5 today, we'll hear from Tom O'Brien, all those winners, fantastic winners of the competition. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. We're back. Give me 1 second here. I just need to do this. I want to get my CD introducing the Chapman Wave methodology. I want to show you something here. If I can just... there we are. And look at this. That technique that I discussed, the H pattern. Now, how about this? Let me go to my, this is chapter 17. Let me just go to chapter 17. Let me show you something for those of you who are new to TFNN, maybe haven't seen this. This particular pattern, I talk about a lot. You come down sharply, you make a little H pattern. In other words, you try to rally. There's no more than a peak A or a B, and it goes to an A minus or a B minus. Why? Because it takes out the left side low and it keeps going down. It's a scallop formation or lowercase h pattern. And maybe eventually you can turn it into something like a lowercase M pattern as the H extends, just making a series of arches. But most importantly, look at this. Look at this particular pattern here. This is the weekly chart, but I'm going to show you the monthly chart and the weekly and the daily all together. This is GTAT, GT Advanced Technologies, Inc. One of the reasons I was asked many times, would I put it on in my subscribers list, and I looked at it and there was just something not right about this chart. For all the fantastic things it was supposed to do, what is it, highly unbreakable glass or something like that, something was not right with this chart. Well, lo and behold, this morning it's announced, and that's the reason why it's down a little bit today. It's only down 92%, down 10.24 at 81 cents, having been at 20.54 in the Chapman Wave Peak D. But look at that H pattern right here with it little doji, silent doji candle there, silent doji candle there, and all of a sudden it breaks that left side low bar in the weekly chart of 13.42, plummets under it, and doesn't bounce back in like the gold is supposed to bounce now because it's made a left side, right side price time match plus a test. This is the opportunity for gold if it's going to do it at all. This is the week it should try to have a decent bounce. Well, this couldn't do it. It went right through the 200 period exponential moving average, that yellow line, that goldy brown line. And the weekly chart down. So they filed for bankruptcy or something like that, filed for Chapter 11 protection out of nowhere. I was asked to show it. Yes, look at that. Peak D in the weekly, peak D in the monthly. Oh, not a good chart. All right, let's go back to our story here. DXY, and then we'll go take our callers. Look, the dollar is having a powerful surprise leg, but it wasn't a surprise to us because we were expecting a leg D on Friday. Now you've got the D, possibly peak D, and now the dollar for the first time can have some kind of a consolidation at peak C in the weekly, probably, especially when a Monday sees a pullback, gap down pullback like this, and right at that resistance level in the monthly. It deserves a 7 to maybe a 5 to a 7 or 5 to an 11-day a pullback, but it might not even take that, but it could have a pullback to 85.77 to 85.43, and that's going to allow GCZ to finally have the little bit of a bounce. It's trying today. It hasn't even got back to half of Friday's down candle, but if gold closes by the end of the day or tomorrow in the 12.05 to higher area, I would say 12.11 to 12.17 would be a real good test. So this is a good time to see how the gold stocks are going to be doing when they close today, and to see whether or not this is I'm only treating it as a bounce because the monthly chart is still very ugly. So this is a bounce in the gold contract, and you've got the dollar we just spoke about. Now, bonds, you know what I'm going to do? I'm going to go straight to our first caller, Jerry in the Back Bay, Boston, that is. And hi, Jerry, how are you?
Good, how are you?
I'm well, thank you.
Yeah, I'm interested in the TLT.
Oh, okay. That's, this is one of the most important periods in price that I can think of in the TLT over the past, I would say, 5 to 8 weeks. One of the reasons is this.
I would say like the past 30 or 40 years.
Well, I'm going to get there. I don't know about the past 30 or 40 years, but definitely in the past good few years. And one of the reasons is this. If I'm correct in looking at my charts and saying that there's a really good opportunity for the first time to see the equities, the stocks, start to pull back again this week.
Yeah.
And that there's a really good chance that money will go from equities into, I love the word, the safety of bonds.
Right.
I mean, we have to laugh at that. The safety of bonds, and yet they have been the safest thing. If you really want safety, bonds have been the safe haven rather than gold, which is normally the traditional way to look at safety.
It's sort
because
of
gold is a currency of fear, so there's no real fear out there right now. And yet, bonds, in fact, have become a currency of stock market fear. So I want to follow up on this, and it's just perfect timing, Jerry. Do you have a moment to stay online?
Of course.
Wonderful. We've got Jerry in the Back Bay of Boston, beautiful area of Boston, right there on hold, and I'll be back from Massachusetts, a beautiful area of Boston as well. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full custom optimization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks, we're back. Dow's up 25, S&P's up $1.72, and we're on with Jerry in the Back Bay in Boston, and we're looking at TLT, we're looking at bonds, we're looking at what in fact, would spur bonds to break into a new high ground, that is a recovery ground, and would there be a transference as money migrates from the stock market to the so-called safety of bonds? And that's really, not only is it a big question, it is the timing of the question that is so important. And let me just put it this way. So, Jerry, this is what I'm looking at. The cup formation that's formed in bonds, a little different, is slightly different to the formation in the TLT. Let me just show this here. Just a little Not that much, but it's just that the TLT had more of a V-shaped pattern, and V-shaped patterns can often be more powerful because when they consolidate very quickly without that time lapse, and then they break to the direction that they've been going in. In this case, it would be upside. Now, the reason why today is quite important is because the TLT is down 14 cents at 117.56. The bonds are, let me just see exactly where bonds are. Bonds are, don't use. They're up three ticks. So this is very important in the sense that if we've already had a spike to the upside, we've already had a decline, and now we've had the retracement, so not even a 50% retracement, a retracement nevertheless, and a pullback, and yet another one. This is like, gosh, I always think of this. I don't know why I always think of this, but when I go to, whenever I see something that's bouncing, I think back in the days when my brother and I were sitting at the dining room table with my parents, and I would take the knife and I would take the blade, and then the handle was overlapping, and I'd go, ding, and it would go, bounce, and then slow down as it oscillates. Of course, my parents were never too impressed with that, but that wasn't the point. The point was the oscillation, and that's what we've got here. We've got a little oscillation, and now all of a sudden, you've got the smallest little movement over the last 3 sessions. So what's going to be really important with the stochastic at 87%, and the MACD still rising, as I'm looking at the TLT, and let me just show the 120-minute chart here, and the 120-minute chart made a peak F and has already made the start of a cup formation, but the last 2 bars in the 120-minute chart are not that impressive. It should have been, TLT should now be at about 117.90 to 118.10, or maybe 117.80 to 117.90 at least. And right now they're at 117.59, so it's using up time. So I'm going to suggest now, here's my question to you, and I'll continue with the answer that I'm looking at right now. My question to you is, do you have any position? Is this a market-related question, or is it a position-related question?
No, I'm thinking of taking a position because my analysis. I write reports on the economy and the market, right, and that we have extraordinary influences on our bonds now. With the strong economy, the rates should be like 50 or 100 basis points higher. But with Europe rates, the bonds at 0.8, the 10-year bond, right, and a declining currency, and the Japanese bonds yielding 0.5 and a declining currency, that people are buying our bonds as a safe haven for foreigners. And so it's going to confuse people, and these bonds could rally when, if you look at our economy, you would think they shouldn't. And that'll scare the stock guys, and we're going to have a decline in the market a little bit, and this should rally. So I'm looking for a safe haven trade for about a month while all this confusion filters out.
So, okay, that's really the reason why I asked the question is because if I'm looking at the weekly chart, if there is a move, it doesn't even have to hold, but if there's a move above 118.26, the high of last week, that would suggest strongly that the MACD could start to cross positive and hold positive into Friday. And if that happens, you get an M-shaped pattern, and that would allow bonds, both the TLT and bonds themselves, to rally to at least test the previous high of 119.43. In your case, what you're really looking for is more a safe haven. You are prepared, as long as there's a gain. My suspicion is that it isn't the percentage.
You understand it, yeah. If I put 10%, I'm managing some portfolios. If I put 10% in that and it goes up 2%, and the market goes down 4%,
that's a fabulous relative return.
That's a good move. Yeah.
Yes. Now, but there's something else. If you only go up.
But if you're wrong, you look really stupid.
Well, I was just going to say, if you only go up.
Everybody says rates are going up. The whole world's saying that, yeah.
Right. And we know that the Fed is really determined to keep the rates as low as they can, as long as they can. We know that at some point they will fail to do that.
Yeah, but they're going to stop buying bonds. They bought $4 trillion of long bonds, and now it's ending. So we
Right.
need a new buyer in there, and it's going to be foreigners.
And the relationship will not be the Fed anymore, but it'll be foreigners. Now, this is going to be so. This is a great question, and the only way I can answer is on a purely technical basis. Remember that it's been 12 or I'm pretty sure it's even more than 13 years or 14 years that I've been talking about. Actually, no, it's way more than that. I've been talking about at some point the United States is going to Japanize their bond yields.
That's not impossible.
It's been my theme for I don't know how long, and it just keeps seeming impossible. However, there is a big difference because Japan did not see the stock market recovery in any way, shape, or form like we did. We've gone to all-time highs, and I think their best was 50% recovery, then it dropped again. So I mean, when they made their top at 39,000, that was the top. That was a major top. So let's put this in the context of returns, relative returns. If I'm correct that there will be a continuation of the down move in the stock market this week, and there's a big F, but this is my analysis. There's a good chance that bonds, the TLT and bonds, should at least have a high-level consolidation. You see, I'm trying to couch it into the most conservative terms. And that would say
zero would be better than the stock market going down.
Or even minus 1 point or 2 points in the TLT as opposed to, say, minus 400 or 600 in the stock market. So I'm just saying it's relative. So here's what I'm thinking. I would scale into, maybe you can't do that, but this is my thinking, that I would scale into some part of the TLT here. And I would rather scale when I get the confirmation that money's migrating out of the stock market into bonds. You'll know that because the moment it takes out 118.26, that's leg C in the daily, but it really recycles the weekly to leg C as well. And then recycles the monthly into leg C. So I would say that I would scale in on very small increments, like a little bit here. And if you start to see that the stock market, now that the market's down, Dow's down 7, S&P's down 2 3/4. If you start to see that and with the NASDAQ down, that's really telling me that we're losing leadership. That's the most important thing here. You cannot have the generals running away without the soldiers, and the soldiers can't lead without the generals. So I'm going to suggest you start a little position here, but I would scale in as you see a response in bonds that's positive as the stock market pulls back. That's the best way I can see it. And if it does break to 118.26 in the 27 in the TLT, my target would be a retest of the most recent high of 119.43, and if it takes that up by 1 penny, you will see that's going to be a very strong leg, a new leg C in the weekly chart.
All right. Thanks a lot.
Good. And I'm totally wrong. If at any point, even 1.5 points down to 116.40 needs to hold on the TLT. If you see the market go up, TLT pulls back, then I would not do this. That's why I'm saying scale in upside. I wouldn't want to try to catch it on the downside. Hope that helps you, Jerry.
Yeah, that's a very good layout. Thank you. Take care.
Thank you very much. Always appreciate your call. So, folks, now the Dow's down 11, S&P's down 3.3. Now, one of the reasons why I said to subscribers, and I've been very methodical about this, is I said to subscribers, we're going to get these positions. We're going to go back into the positions that we had really good profits in, and we're going to try to scale into some we got stopped out of with profits, but we'd like to get back in. Now, I had it all typed up. This is, I think, a lesson here. I'd like to, it's against me, but it doesn't matter. This is all about education. Rarely do I change my call after thinking it, especially on a Monday when I've spent the whole weekend thinking it through, and then at the last minute, for some reason, an emotional reason, at 20 past 8, 10 minutes before I'm about to send out my opening call, do I change the call? Well, today was one of those. I wanted to get back into the VIX, the long side of the VIX, which we had a fantastic profit in, and I want to get back in. I said, we'll wait a day. I changed it from buy at the opening to we'll wait a day. But fortunately, I held tight, and we've still got almost all of our other positions. And but there was another one that I wanted to get in, which is up beautifully right now. We can still get in. It's still very early in this particular sector. But that wasn't the point. The point is I changed my call at the last minute. I'm not even sure why. I wasn't listening to anything. I just, out of the blue, I just said, you know what, maybe I should just give it another day. We've had such nice profits to go back into these things right away. Is that the way shouldn't I think? Well, I thought, but I had already done the thinking. It was an emotional response. I took out two particular buys that were unfortunate because they would have been fabulous to add. We got so many short positions, I don't really have to worry about it, but it's just a personal thing. And I wanted to make it a lesson. And the lesson is you think it through, you follow your plan. Don't change your plan for any reason at the last minute just because of no reason, just an emotional reason. Wrong thinking. Let's go to our next caller. We got Brent in Martinez, California. Brent, how are you?
I'm doing very well, Basil. How are you today?
Well, I'm doing fine, thank you. In fact, I need to, if you don't mind, take just a moment here because I had a number of, I missed 2 sessions last week for just personal reasons. I was healthy and everything, but just it just happened, and I had a number of people emailing me to say, "You okay? Are you okay? Is everything okay?" And the answer is yes, I am fine. From later next week, I will be away, but at this particular point, I'm here, and I just wanted to say things are fine, and I'm just turning around to answer some of these questions. Yeah, basically it was the same theme. You okay? And let us know if there's a problem. No, I'm fine. I'm fine. And thank you anyway for your concern. So let's go back to our story. We got PBR, which is this the one that Petrolia Brasileiro? There's something else. SA, it's an ADS trading at 15.93, up $1.96. A huge gap up, an island reversal. Well, I'm not going to make a big deal of that because it's a foreign stock and they often have island reversals. But it is a peak E from the 200-period moving average in the weekly chart, plunged to the downside, and an A, single leg A failure pattern. Well, it isn't a failure pattern, potential failure pattern in the monthly, but this is a nice pop-up. Did you do any buying? Because I know this is one of those that you follow closely.
Yeah, this has been very good to me, Basil. I bought it. We talked a long time ago. I bought it that previous low at around $11, dollars, and then I rode it up to around 19, and then I just bought it again the other day.
Almost at the exact top. It was a perfect sell. Great. And now you're back in it again.
I bought it, the other day when it got down to 1301. I'm in at like 1320. So
I'm going to make a suggestion here, and it's based on 3 factors that I can see. It's based on the daily having a very nice spike with the stochastic, but the stochastic still only at 14.61, but it is rallying. The MACD's fast-moving average, the 9-period differential, has turned up, and that says to me how it fills the gap and touches the 200-period moving average on any pullback at 15.44 is going to be really important. That's number one. Number 2 is the weekly chart. This is just merely a bounce within the parameters that have been set between the 9-period moving average of 16.27, and it's trading at 15.92 right now, and the lower bar that was made at 13.01. So once again, how it holds, how it gets into the 1640s and holds is going to be important, because if it just has this one-day pop, certainly on a weekly basis to see a gap like this island reversal, even though it's a foreign stock, to do it on a Monday is kind of important. But I'm a little concerned about the monthly chart in that if it rallies from here, no, I'm concerned that if it fails and takes out the low of 13, this is the monthly chart, it's in real trouble. But what I am pleased about is that the MACD has been, I don't know if you noticed this, but in the monthly chart, there's been a very positive divergence between the MACD rallying, the relative strength rallying, the stochastic rallying hasn't gone to 8%, it's only 7%. Hey, can you hold on a moment? I think this is worth looking at, not for the downside, but the potential upside if it's 16. So can you hold on?
Yeah, I'll hold, Basil.
Wonderful. Folks, we'll be right back. Basil Chapman, right from Michigan. Dow's down 43, S&P's down 7. I'll be right back.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks, and yes, I certainly do recommend that you listen to Larry's shows. Just a great analyst. Oh, let me just get back to Brent Martinez. I was doing so much work during the break. Almost forgot about Brent, I'm sorry. I did some work on the PBR on the 120-minute chart. It's at peak C now. If it doesn't make a new high bar above 1634 in the next until 11th, until that'll be 9:30 to 11:30. Going to 130. So this is very important in the sense that it looks, everything about it looks as if 1665, which is the 200-period exponential moving average wants to be tested, and that would coincide with the 1663 high at 1530 on the 26th of September. So I shouldn't use the military numbers because it's almost the same as the price. At 1663 on the 26th of September at 3:30 in the afternoon. So that little doji high, that if that gets taken out, immediately it'll touch the 200-period moving average. That's the way it's looking right now. And what I'm going to suggest is, because you have a really nice feeling for this stock, that's number one. Now, I do technical analysis all the time. Almost always I use technical analysis to get into stock. Sometimes I'll just do it on a fundamental reason, and I often live to regret the day. But sometimes it works out. I just never know. But the most important thing is I do technical analysis. Even when I do it fundamentally, I still have to have some technical veracity to be able to keep it sustained or on the decline. But in the meantime, I think that you got a fabulous entry point, and I'm going to make two suggestions. So there were three things I was looking at: was the daily, the weekly, and the monthly. I added the fourth dimension, which is a 120-minute chart. But I think it's your sense of timing that you've got built up over this stock. We get to know certain stocks really well, and that's the reason why I do a Dow daily analysis every single day. I've done it for 30 years or something like that, every single day that I've been able to do it. So you get to know something really well when you do it that closely. So I'm going to suggest that you've got something here that's really important. You've got a great entry point. You've got a great takeoff. You're in a profit position. I would just say 14.96 to 14.33 is really the level that it has to hold on both the daily and the weekly chart, because if it takes that support out, then there's a real good chance, based on the way the weekly will fail and the way the monthly will fail, that it's going to go lower. So your entry is great. I'd be a little cautious if it hit 1496 to 1496 to 1466. I'd take a little bit off to say, uh-oh. Or if it starts to hold very well and you haven't taken anything off, that's why you might even want to add to it if it starts to rally again. But that's the critical cushion level that I'm looking at on a short-term basis. But I'm suspecting that this is going to test the mid-16s to the 17 area, as long as by Wednesday it hasn't broken the support I'm talking about. So I hope that helps you, and congratulations on a fabulous entry.
All right. Thank you very much, Basil. You're a great help. I really appreciate it. You have a great day, okay?
You too, and thank you so much for calling. So, folks, before we go to Larry, don't forget, we've got a great program all the way through, and Larry, of course, is very special with these butterflies and godlies and analysis of the different, especially the currencies. I'd like to hear what he's going to be saying about gold. So, here we go. As far as I'm concerned, the VIX index remains my number one tool. If that volatility index, which is at 1563, climbs back into the mid-16s by the end of the day or tomorrow, beware that weekly chart is starting to improve, making higher highs and higher lows. That is something that is not usually stoppable in the VIX once it starts doing that, until it makes one of those intense reversals with 2 to 3 weeks of absolute down moves. And this week, so far, it's one of the few times it's come off the top and it's gone right back into the middle of that actual candle. So, folks, stay tuned for Larry. Don't forget, check out my work. It's a great time to do it. I'm going to be adding new positions to the short side probably by tomorrow. Check out my opening call. Go to the front page of TFNN. You get 2 weeks straight. I'll be back tomorrow. Have a great day.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.